In this video, we're going to go over STIX, the polymetric short-term indicator. It is a good breadth momentum indicator. Basically, it lets us know for an uptrend and a downtrend and the strength of that trend. We're going to go over how to calculate STIX. Then we're going to review what the numbers mean. And we're going to go over some strategies or a strategy for trade on the stock market using STIX. Here is the equation for STIX. S equals A divided by A plus D times K times 100 plus P times 0.91. Let's go over what some of these values mean. So S is going to equal today's STIX number that we're looking to calculate. A is going to be the number of advancing issues in the day that we're looking at. D is going to be the number of declining issues in the trading day that we're looking at. P is going to be the previous day's STIX number. If we're doing this for the first calculation, we won't have the previous day's STIX number, so we're going to use 50. And then K is going to equal a 21-day exponential moving average. The first value we're going to look to obtain is K. K is a 21-day exponential smoothing average. This equation will equal 2 divided by n plus 1. Since we're looking at 21 days, n will be 21. So it's going to be 2 divided by 21 plus 1, which will be 2 divided by 22, and that will equal 0.09. So let's plug this number into the equation. The next value we're going to look to get is advances divided by advances plus declines. For example, we're going to look at January the 6th. So to get this data, we're going to go on the Wall Street Market Diary webpage. The link will take you to this page here, the Wall Street Market Diary. Every trading day, Wall Street will list the number of advancing stocks and declining stocks for the corresponding trading day, as well as the previous trading day. So right here, we see the number of advancing stocks for January the 7th, 2021, and these are the number of stocks at a higher closing price than they did on the previous day, January the 6th. And they will also list the declining stocks. These are the number of stocks that had a lower closing price on January 7th than January the 6th. For the previous day, this is the January 6th numbers. So January 6th had 2,032 stocks at a higher closing price than they did on their previous trading day, January the 5th. And then they had 1,160 stocks that had a lower closing price than they did on their previous day. So let's take these numbers, because we're looking at January 6th for our example, and plug them into our equation. All right, so here is our numbers for January the 6th. For any value of A, we're going to plug in the number of advancing stocks, and for the value of D, we're going to plug in the number of declining stocks. Since this is our first STIX calculation, P, which is the previous day's STIX value, will equal 50. A value of 50 assumes that the previous STIX 21-day smoothing average had the same amount of advancing stocks as decline stocks. This assumption, of course, may not be correct, especially if we start our STIX equation in a trending market. However, after a few weeks of performing the STIX equation for the preceding trading days, the STIX value will be correct no matter where it starts. Now that we have all of our numbers in our STIX equation, let's calculate it out. If we take the advances and divide it by the advances plus declines, we get 0.64. If we take the previous STIX value, which we're going to use as 50 because it's our first calculation for STIX, and multiply it by 0.91, we get 45.5. We're going to take the advances and declines and multiply by the 21-day smoothing average, and that's going to give us 0.58. Then to get rid of the fraction, we're going to multiply it by 100, and that will give us 5.8. We're going to add that value onto the previous STIX number times 0.91, which again is 45.5. And what we get for the STIX value of January 6, 2020 is 51.3. Now let's go over an example for January the 7th, 2020, so one trading day after January the 6th. Here are the advances and declines for January the 7th. So we're going to plug those numbers in. And the only real difference here, besides the different values of advances and declines, is we're going to use January 6th STIX number, which is 51.3, not 50, because now we do have a previous STIX number. And if we do all those calculations, what we get for January the 7th is 56.8. So what does a STIX value measure? Well, STIX value oscillates around a perfectly balanced number of 50. As we know, a stick value of 50 means that the number of advances equaled the number of declines over the 21-day smoothing average. Historically, records from stick have ranged between 28 to 69. The higher the stick value, the more bullish the market is, and the lower the stick value, the more bearish the market is. A good rule of thumb to use when following the stick indicator is to buy long when the stick value crosses above 49 and to sell that long purchase when the stick value crosses below 49.